Good morning. It's Harvey Jackson from Producer Profit. I just want to probably start off with the main news here, and I'll get to it and maybe look at some of the charts of it as well. 25% tariff applied on Canada, Mexico, and an additional 10% on China as well. Mooseman meeting today. Even if you show up for the first part of the meeting, there's not an itinerary that's going to take us right to 5. It's just give us enough time there. So if you show up even for a couple hours, that would probably get through most of the meeting anyway. Same thing in Steenan on Wednesday. Look forward to seeing you guys there. Uh, Krista Freeland is complaining a little bit about the filibuster that's going on with the delay of not showing producing documents in Parliament, uh, which is boo-hoo-hoo to her, I guess. So here we are with the main news. Trump is going to put on a tariff, and he's basically quoting right here that on the first day, he's going to be signing this executive order to put a tariff on for these open borders, Canada, U.S., and it's on all products. And just as a news note here too, U.S. accounted for more than 83% of the exports from Mexico, so exports Mexico produced, and in 23 and 75 of the Canadian exports. The other thing that I kind of highlighted here too, this threat could be trying to renegotiate the agreement with the three countries early, and that could be something that's going to bring on that as well. So you got this little bit of a spike in the dollar. You can see it. I'll show it in a bit. But hey, and here's the other thing. It's not written in here, and maybe I don't know nothing for nothing, but um, Trump is getting a lot of press and a lot of people basically bowing to him. And when you look at it, he might not even have to do any of these things if he can get some of these things solved before he even gets sitting in the chair uh, on January 20th. Wouldn't that be something? Um, uh, so here's something that's been pretty fantastic is to see how this has changed in the good to excellent on the winter wheat. The moisture in the fall has really brought things along, and probably those crops are looking a lot better. Here you can see the moisture in a lot of those winter wheat growing areas. It's the most in the last this timeline that we've seen in years, right? So 132 years in this timeline, it's the wettest in a lot of it. So that's good. Soybeans rise on demand of Black Sea concerns. I think anybody's looking for a headline, and they keep on putting some of these in here, and I'm just wondering why I'm doing it myself here. Anyway, so let's move on. Canola is down pretty hard, and so maybe Cargill is right with maybe they had some insight on what Trump was going to do here. Rapeseed is up, and soybean oil is up pretty strong as well. And I have to say that with some caution there as well. Palm oil is up as well, and your soybeans up 4 cents, and your wheats are actually up pretty decent today as well. So just look at this on the chart. But canola, I said it was down quite a bit. That we've had longer legs in these last week than we see today. Still supported at 23.6 as of yet, which is below that $600 value on the Jan contract, and we're basically getting into a probably an oversold kind of a position here very soon. So November canola, this is where the recommendations were to put out some sales in there. This is where we're currently trading. Looks like we're getting a lot closer to that full retracement value than we are on the front month. Rapeseed, a little bit of recovery here, but when you look at it, the difference between the Canadian canola and rapeseed priced in Canadian dollars for your front months here, $182. Like holy smoke! We definitely should be able to catch a bid here soon in the European market. If they're short, they should be buying it from us. And they started. You saw Belgium buying a fair bit there so far this month. So we'll have to see if there's going to be more interest there as well. So when we look at this in a longer term view, uh, I I think we're hitting some highs here that we have never been to before. So there is got to be creating some interest here at some point here. So soybean oil, Green Day, which is good, bounced off the 23.6, and looks like there might be a little wee bit of a recovery here. Palm oil, not as big of a candle, but it is a candle, a green one so far, and very likely to try to get a little bit of a recovery here. Crude oil, green candle there, but not as big as those down candles that we've seen the last couple of days. So what I'm comparing to, so the previous chart was at 69. Here's your Western Canadian Select, and this is a very slow moving chart. So um, and it shows in 1 month. I fully expect to see this maybe in the next day or two, and I'll try to show this again because it's not real live data. But I would expect we're going to probably take a hit on the Western Canadian Select, which is the heavy crude that Canada sells the U.S. We're probably going to get a bit of a hit on that for sure. Soybean by itself, we're getting this little wee bit of a recovery off the bottom that it's making, but it's still in having trouble, and it's trading right at the $10 mark right now. Soybean meal, it's been really close to the bottom, and actually, when you look at it on a broader scale, soybean meal, it's quite cheap for a feed protein source, as far as I can tell on the chart. Here's the move in the on a minute chart, and or 5 minutes. So it got down all the way down to 70, 90, somewhere in that area, a little bit lower in that range, and we're currently trading at 71.29. So where does that put us on the 3 months chart? And then look at it again. Where how many times in the last little while were we below that? And you can see back in the late 90s and early 2000s, we traded lower than that as well. So let's get into wheat. Wheat is actually having a good size green candle and positive day. Hopefully we can continue this. But when we look at this on a broader scale, so basically April until now of 22, where the highs were, and we're nowhere close to breaking this downward trend. And I've shown that in the past where we looked at other cycles. It took 3.5 years to break out of that downward trend cycle. We're only at 2.5 years of it. Uh, Looking to, again, if we get to anywhere close to maybe even, we might have to lower our target down to the 680-ish kind of values if we were to get any rally at all to get some more sales made on the new crop wheat for December 25. Chicago wheat trend, uh, still not our friend. And same thing with Kansas wheat. Equal candles, downward candle, upward candle. So it could be just a recovery from some down days that we've seen. Milling wheat, same kind of thing. And your corn still looks like we're in this wedge here. And what side of the wedge are we going to move out of here would be the next question. And that's all I have for you today. Look forward to seeing you guys at the Moosomin and Steenan meetings.